Volatility grips the market as traders prepare for a possible move into Syria. In today's cover story, are more job seekers calling it quits? Plus, find out if your 401k savings are being eaten up by fees. And does Apple have something extraordinary in store for consumers? First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. It's Monday, September 9th. I'm Angela Miles. In today's First Look, traders and investors set their sights on Syria. Friday, Russian President Vladimir Putin's comment said he would support Syria if the U.S. attacks with airstrikes dramatically moved the market. The Dow briefly crossed 15,000 with large gains before selling off. The whippy trading session ended with the Dow down 14 points, the Nasdaq up 1, and the S&P unchanged. Gold gained $16 and oil had a burst of buying, surging above $110 per barrel. Also making headlines, according to the Wall Street Journal, Apple is shipping low-end iPhones to wireless carrier China Mobile. The Wall Street Journal also reports Johnson & Johnson is considering selling its slow-growing blood testing unit for $5 billion. Scott Shellady of Trion joins us on this Monday morning. Good morning. And once again, the market is on Syria watch.
Yeah, it's going to be on Syria watch. It's going to be on what we see what happened with this 10-year. We've got a lot of things to worry about. Syria, as far as what we do, we're probably going to get some more clarity towards the end of the week, I think, on that one. But we're going to watch that 10-year rate rise, maybe through 3%. We could go to 3.25%. At the same time, we see equities rise because we think there's going to probably still be some good accommodation and we won't taper as much.
And what about oil? There was a big surge on Friday. What do you anticipate this week?
Well, it's geopolitical, and so you're going to have to be careful about getting too long oil right now because if things settle down, it's got a long way to come off. So that's a geopolitical issue. I would say it's it's on a precipice. It's dangerous to get long right here, although it could go up another $5, but I think it ultimately settles back to 95.
Despite all the news and the noise in the market, there have been some sturdy stocks. What are you watching in the market that you like right now?
Well, it sounds kind of perverse, but I really don't trust the stock market right now because of what we saw on Friday's action. The volatility is a little bit too crazy for us. So we're still looking at the 10-year, and we expect that 10-year to get through that 3% level, not really because we think it should, except for the fact that there's some good technical signs telling us we're going to make a run at 325.
If you don't like the stock market, what are you rotating into?
Well, we're rotating into getting short those 10 years. I think that 10-year yield has got a ways to come off here, or at least rise in the yield and the bonds to sell off. So we're either buying puts or selling 10 years because it really looks like we're setting up for a run towards 325. And I have some technicians telling me maybe ultimately 4%, which is crazy.
That is crazy. Thank you, Scott.
All right.
The market on edge. The possibility of a U.S. military strike against Syria is creating tense trading in stocks and commodities. This week, the Senate begins debate and will likely vote on a resolution to use force against the Syrian government in retaliation for a suspected chemical attack on the Syrian people. House leaders are said to be waiting for a Senate vote before taking up the matter. President Obama is set to speak to Americans Tuesday about his decision to use force.
I put this before Congress for a reason. I think we will be more effective and stronger if, in fact, Congress authorizes this action. I'm not going to engage in parlor games now, Jonathan, about whether or not it's going to pass. When I'm talking substantively to Congress about why this is important.
Wall Street has another concern beyond the potential airstrike. The crisis in Syria may delay President Obama's decision on who may replace Ben Bernanke as Fed chairman.
Facebook could update its privacy policy this week. The social media company has been taking comments from the public about proposed changes. It could make a statement on whether there will be further updates to its privacy policy. Facebook is finding more fans on Wall Street. The stock closed at $43 after hitting a new high Friday of $44 per share. Last September, the stock was trading around $18.
A blockbuster bond offering from Verizon could happen this week. Verizon is paying $130 billion to buy Verizon Wireless from Vodafone. Verizon Communications could sell its debt in the form of bonds to help fund the mega deal with Vodafone. The bond offering could go as high as $30 billion. That's according to Forbes. It would top Apple's record bond sale in April of $17 billion.
As Ford's car and truck sales motor along, Standard & Poor's is upgrading its credit rating. S&P is lifting Ford to investment grade, a big improvement from the days of the recession. It's also a sign the car company has a low risk of defaulting on its debt. Ford reportedly holds $30 billion in cash and lines of credit.
And Ford CEO is clearing up rumors of a possible departure from the company. Alan Mulally tells CNBC he's absolutely focused on Ford. It follows whispers that the automaker's board is open to letting him step down to explore other options. Ford says Mulally plans to serve as the president and CEO through at least 2014.
The UAW is attempting to make inroads at a VW factory in Chattanooga, Tennessee. Union reps reportedly met with Volkswagen officials in Germany about creating a works council to give employees a say in plant operations. Republican lawmakers in Tennessee argue the union would hurt the state's ability to attract manufacturers. The UAW says the union's goal is for both the company and workers to succeed.
There may have been slight gains in the jobs picture last month, but that success is tempered by the fact that there are fewer people looking. Our cover story examines what's being done to help those who've given up or run out of unemployment benefits and are no longer being counted. Among the Labor Department's numbers showing a slight increase in employment, a disturbing figure also came out: the civilian labor force participation rate. That measures how many healthy working-age people 16 or older are looking for jobs. In August, it fell to 63.2%, the lowest it's been since 1978.
The Department of Labor said that the average worker over 40 that was unemployed took 13 months to get back to work. It's a long time.
Some say the participation rate is a sign that hiring conditions, especially for those who've been out of work the longest, got worse toward the end of summer.
There's still a lot of workers, especially older workers, leaning towards their 60s, who've determined that it might be best for them to start like their small business or do contracting and consulting.
75% of Jenkins' clients are over 40. Some studies say the oldest in the labor force, those 65 and older, haven't dropped out because they can't afford to. Armando Sarmiento is 73.
I'm going back to work. I'm going to school right now. 4 years, so I have to try it. I'm studying computer science. As soon as I'm done with that, I'm going back into the workforce.
What kind of work?
PC repairment, repair computers.
For those willing to move for work, CareerBuilder launched an interactive map showing cities with the most job openings and lists industries. In Seattle, for example, there are more than 95,000 aerospace jobs, an increase this year of 20%, and an average annual salary of more than $124,000.
Reality is, if you're a job seeker in the middle of the Southeast, you're not going to know what opportunities exist in Arizona or Texas unless you look at data.
Rasmussen says a lot of the jobs are in mid-sized cities with good schools and infrastructure, but most importantly, they're in states presently trying to attract companies to relocate there in hopes of eventually boosting their tax base.
A pair of biotech companies are preparing to open up for public trading. Acceleron Pharma will price shares between $13 and $15. The ticker symbol will be XLRN. The company develops protein-based drugs to treat rare blood disorders. And Bind Therapeutics will sell shares anywhere from $14 to $16. The ticker will be Bind. Its business is focused on developing drugs to treat lung and prostate cancer.
When it comes to drugstore prices, it's all about location, location, location. A new study reveals drastic price differences at Walgreens, CVS, and Rite Aid. Walgreens had the highest prices. One item could cost as much as 55% more depending on where the store is located. Walgreens says its prices reflect the company's cost of doing business in different neighborhoods.
The world's largest cruise ship company is testing the waters with new pollution controls. Carnival has reached an agreement with the EPA. During the next 3 years, it will install $180 million of equipment that will reduce air pollution on 32 of its diesel-powered ships. The cruise line has a total of 102 ships.
Honda is upping the ante for automakers. It plans to release a 2014 Accord Hybrid with a rating of 50 miles per gallon. It now takes the lead in the mileage race, inching ahead of Ford's Fusion Hybrid, which holds a rating of 47 miles per gallon. Kelsey Mays of Cars.com says the big news is not the number itself, but rather what it means for consumers.
In terms of absolute math, this isn't that big of a deal because the Accord Hybrid only gets a few miles per gallon city, better than the rival Ford Fusion Hybrid, but consumers like the number, 50. It's a big number. And it's a number that, if they can actually achieve in the real world, should get plenty of them to shop for the Accord Hybrid.
May says the move is a win for Honda as the fuel economy title will attract consumers who want a more mainstream car.
A vote deciding the fate of Dell is reportedly too close to call. After 2 delays, shareholders are scheduled to vote Thursday on who gets control of the computer company. Some analysts tell MarketWatch.com the vote appears to be leaning toward Michael Dell, the man who founded the company, in his dorm room. Dell wants to take the company private. Billionaire investor Carl Icahn also wants to buy out the computer company, but his plan is to keep Dell public.
Digital dollars could eventually be added to campaign contributions. The Conservative Political Action Committee is asking the Federal Elections Commission to allow supporter money to flow into campaigns in the form of bitcoins. The PAC filing the request for action from regulators says bitcoins are popular with libertarian-minded voters. One of the issues with the virtual money is the value fluctuates, making it difficult to track contributions to candidates.
Tourists are causing a triumph in Greece. The strained economy is faring a bit better as revenues increase from robust tourism. Reports say Greece now has a possibility of emerging from its 6-year recession by 2014. Tourism accounts for roughly 15% of the Greek economy.
Beer sales are setting up for a major boost in Brazil. The country is hosting the 2014 World Cup. Beer sales are expected to reach $330 million. Anheuser-Busch InBev is expected to benefit greatly.
Here's a look at the economic calendar for today. It's consumer credit for July. And on the earnings calendar, Casey's General Stores and Pep Boys. Still to come, eyes on Apple. Will the company come out with a breakthrough product tomorrow? Plus, we'll reveal the secret fees chipping away at your retirement money. And pension problems persist in Detroit. First Business continues right after this.
Missing money in Detroit. A new report says pension trustees have weakened retirement funds by misspending money. Reports from Conway McKenzie say hundreds of millions of dollars from retirement accounts were used on savings plans and bonus checks for workers since the 1980s. The restructuring expert says the practice robbed retirement funds, leading to the current crisis. Pension trustees deny any wrongdoing.
Secret fees are popping up in 401k plans. Shayna Steiner, Bankrate.com, is Skyping with us this morning. Good morning. And what's been uncovered about these pesky charges?
We looked at data from the company Brightscope to see how 401k fees impact the amount of money somebody retires with. And we found that employees of very small companies pay nearly 3 times as much as employees at very large companies. And the end result after 35 years of work is a difference of about $100,000.
That's a lot of money. So how do you avoid these fees? How do people know that they're even being charged these fees?
Well, the fees that participants see is in mutual funds. So you look at the expense ratio of the mutual fund, and you want to choose funds that have very low fees. The thing about retirement plans is that they can have some hidden fees in those mutual fund costs, and they're known as revenue sharing fees. They're not even equally spread across all the funds in a retirement plan. One worker may be paying more for their retirement plan than their coworker who chooses index funds.
Shayna, thanks so much for enlightening us today. Have a good day.
Thank you. You too.
Up next, is the latest jobs report good news or troubling news for the labor market? Bill Mueller takes us behind the numbers. And later on in Chart Talk, one trader is all over Apple ahead of tomorrow's big reveal. Stay with us.
The August jobs report that came out Friday, kind of a downer. Yeah, 169,000 jobs were added, but that was lower than expected. Yes, the unemployment rate dropped to 10th, but 169K, that's not enough to spool up this economy. Brent Schutte is market strategist with BMO Private Bank, and we saw revisions of the June and July numbers downward. Participation rate is low, and yet you walk in with a big smile. You're optimistic.
I am optimistic. The 169 was only a disappointment in the fact that it was in contrast to some stronger data that happened earlier in the week. So the original expectation was for 175, which 169 is about spot on with the margin of error this report has. Yes, there were some disappointing parts. The participation rate came down. But I think when you look at the majority of the data from last week, you had 3 different reports that point to stronger future job growth. One, the ISM non-manufacturing and manufacturing indexes, which I think are 2 of the best data points that anyone can look at, had blowout months. And so both of those reported high future job growth. The ISM non-manufacturing at 57. If you look back over the past 16 years, there's only been 6 months higher than that. And typically when you have that type of a number, you actually get strong job growth in the not too distant future.
All right, so your job is to take off the blinders and look at not just the immediate data, but the bigger picture.
Sure.
Is there anything else that's indicating what? A turnaround? Are we turning a corner here?
Sure. I guess the other thing that I'm really optimistic about is that small business owners who have kind of been left out of this and haven't been so much hiring or doing whatever it may be, and the optimism has been pretty low. If you actually looked at their jobs numbers, there's the NFIB, which is an independent research bureau. They actually reported that 16% of owners expect to hire in the next few months. That may not sound like a lot, but it's up 7% from the month before. And if you look back over that history to 1986, there aren't many months that are actually higher than that. And so that points to more job growth.
We had the head of Sure Payroll. He comes on every month. He has a scorecard for small business, and that optimism index was looking healthy as well. So that dovetails with what you're talking about.
Absolutely.
Now, we're also seeing, though, that this trend that more and more contractors are coming into the picture. Small percentage now, but the growth there is expected to continue. That's going to have a dynamic change, I have to believe, on the economy.
Sure. I mean, I think it's been changing for a while now. It seems like it's almost a job interview, an extended job interview. And I don't know that that really hurts the economy or harms it. It probably just stretches out the time till people get actually back for permanent employment.
Brent Schutte, thanks so much.
Thank you.
Bill, eventually there may be fewer people entering the workforce. Birth rates in the U.S. have hit another record low. In 2012, fewer babies were born for the 5th year in a row. The government tracked 63 births per 1,000 women between the ages of 15 and 44. In 2007, that rate was 69. Predictions are the labor market will feel the effect in about 18 to 20 years.
Thanks for the update, Chuck. Well, traders are on the fence over what to expect from Apple's big event tomorrow. Coming up in Chart Talk, how one trader is playing that stock. That's right after this break. Set to take the wraps off a new product on Tuesday. Joining us now is Andrew Keen, president of KeenOnTheMarket.com. Hello, Andrew. What are you anticipating from the event and from the stock? Let's start with the event.
Okay, from the event, what I'm expecting is a new phone, the 5C, I think it's going to be called. And then it's going to be determined, how big it's going to be. It's not, they're talking about 6-inch screen, but they're not talking about that to 2014. So possibly a 4-inch screen. Everything's going to be the same. Faster processor, better camera, but I really don't think there'd be too much hype on this phone.
And now the stock.
The stock, I think, will sell off on the event. Usually Apple runs up to the event and then it sells off on the event. If you look on Friday, it had a $10 range, $4.89 to $4.99. Apple got up to about $5.15. It seems like it has this Carl icon put in it, or maybe at $4.65, where people don't want to be actually short the stock. The stock looks pretty strong, but I see some of this money shifting into Facebook and out of Apple.
And what do you think about the overall S&P 500? Where are we going here, especially in light with what's happening with Syria?
Yeah, we had overlapping bars, over the course of the last 5 days on the daily chart. We get up to about 1663.5, which was the pre-market high on Friday. Then we sold off to 1640. So we've actually been kind of in this range between 1630 and 1660. I think that if we break 1630, we could get down to 1580 in a heartbeat. I think we're headed lower. I don't think we could sustain 3% on a 10-year interest rate, and also oil is up another $2 on Friday. Both of those factored in. We have retail pretty weak. I think the market's going to roll over here a little bit. I am leaning to the short side, but stock specific.
And do you think eventually we'll see a good bounce back here?
It should be interesting. We're up a lot this year, but with oil being as high as it is, that really hurts the customer's pocketbook. So economic data has been pretty strong. We see home sales actually slowing a little bit. We had strong economic data last week. Today we don't have any economic data. We're actually through the earnings cycle, so we don't have earnings to look forward. I think oil continues higher. We see the TLT sell off, which means the interest rates are going higher. I think we will roll over.
And Andrew, I should also address you as author. You have a new book out, Keen on the Market. It's a terrific read for anybody who's interested in options trading. It's so well written. Great job and congratulations again.
Thank you. It takes you from option 101 to more complex trading strategy. And actually, Angie's pointing this out, but she's in the acknowledgments section. She wants everybody to buy it so they can read how much Angie has helped my TV career.
Well, you did mention me, which is why you're the only trader I have allowed to plug a book on the show. So thanks so much, Andrew.
Thank you, Angie.
Before we take off today, we'd like to recognize the newest affiliate joining the First Business family, KUCW, Salt Lake City, Utah's CW30. Welcome. Coming up next time on First Business, why saving money could make you more attractive. From all of us at First Business News, have a great start to your week.